21 miles. That's the width of the Strait of Hormuz at its narrowest point. Through that tiny strip of water flows 20 million barrels of oil every single day. That's 1/4 of all oil shipped by sea anywhere on Earth. When the US and Israel struck Iran, that strait closed. And within 72 hours, insurance companies canceled coverage for every oil tanker in the region. But here's what most people missed. This wasn't just an oil crisis. It was the first domino in a 12-step chain reaction that connects crude oil to copper mines in Africa, to power transformers in Texas, to AI chips in Taiwan. The whole system is connected, and the whole system just got hit. Here's what makes this different from a normal oil shock. Think of global supply chains like a game of Jenga. We spent 40 years pulling out every extra block to make the system more efficient. No backup inventory. No redundant suppliers. Every piece depends on every other piece. When one block gets yanked out, the whole tower wobbles. So when oil from the Gulf stops flowing, you lose more than oil. You lose something called sour crude. And sour crude produces sulfur as a byproduct. Sulfur gets turned into sulfuric acid, and sulfuric acid is how mines in Africa extract copper from the ground. No sulfur, no acid. No acid, no copper. The oil shock just became a copper crisis, and we're only 3 steps in. Let's talk specifics. The Democratic Republic of Congo imports over 500,000 tons of sulfur every year just to process copper ore. The Congo and Zambia together produce 1/6 of the world's copper and 70% of its cobalt. Both metals require acid-based extraction. When that sulfur disappears, those mines declare force majeure. That's a legal term, meaning they literally cannot fulfill their contracts. Meanwhile, Taiwan imports 97% of its energy. Qatar supplies about 1/3 of Taiwan's natural gas, and Taiwan keeps just 11 days of gas reserves on hand. Here's why that matters. TSMC, the company that makes almost every advanced computer chip on Earth, uses 10% of Taiwan's entire electricity supply. 11 days of reserves. That's all that stands between TSMC and production shutdowns. If you're building wealth for the long term, this matters more than any Fed meeting. The AI boom that's been driving stock markets depends on data centers. Data centers need electricity. Electricity needs transformers. Large power transformers now take 120 to 210 weeks to deliver. That's 2 to 4 years, even when nothing is wrong. And those transformers need copper. The same copper that's now caught in this supply chain mess. The U.S. grid has 2,600 gigawatts of power projects stuck waiting for equipment. Northern Virginia, where most data centers live, faces 7-year waits for grid connections. All those AI spending projections assume the physical infrastructure shows up on time. It won't. The digital economy doesn't float above the real economy. It sits on top of copper, transformers, and power plants. There are 2 paths from here. In the better scenario, the strait reopens quickly, insurance resumes, and oil flows again. Supply chains get stressed, but recover. Companies learn their lesson and start building backup options. In the worst scenario, the closure drags on. Fertilizer shipments from the Gulf get cut. Those fertilizers supply 40 to 50% of global nitrogen trade. One harvest cycle later, that becomes food shortages across North Africa and South Asia. Egypt's already on IMF life support. Turkey's bond yields were above 31% before any of this started. When food prices spike, governments fall. This isn't speculation. It's what happens when you engineer a global economy with zero margin for error, and then something goes wrong. Here's the bottom line. For 20 years, investors priced physical production at zero and digital narratives at a premium. That's reversing now. Energy companies, copper miners, infrastructure builders. These aren't just cyclical trades anymore. They're strategic assets in a world reorganizing around resource security. The AI boom is real, but it runs on copper, power, and supply chains that just got exposed. One sentence to remember. The digital world is built on physical foundations, and those foundations are more fragile than anyone priced in. If you want to know exactly which companies are positioned for this shift, we cover them in our paid newsletter. Twice a month, you get 5 fully researched trade ideas with limited downside and explosive upside potential. No hype, just high conviction opportunities most investors will never hear about. It's $35 a month on the annual plan, a little over $1 a day. The link is in the description. Don't miss the next one.